Hello students and welcome to the lecture. So students, in this lecture, basically as we know, we are discussing about the financial knowledge and the banking awareness part of it. So in this lecture, we are going to continue with the same thing. We will discuss about the financial knowledge and the banking awareness. And in the banking awareness, basically we are discussing about the banking evolution. In the last lecture, we had started with the more details on the banking evolution. Okay. And we had completed till the Temple's Bank. I hope that you revised the previous lecture before you have come for this lecture, because as I have told you so many times, it is for your own benefit. Okay. So with this note, let's start this lecture and here we go. The financial knowledge is a topic that we are covering. The banking awareness is a part of it. Okay. More details on the banking evolution. That's what we were discussing in the previous lecture. All right. So let's go ahead. So let's start. So basically now we are going to talk about the Jain and the Vaishya merchants. Okay. So basically if we talk about the Vaishya, then first we will start with the ancient India. Okay. Remember in the ancient India, we had discussed about the Vedic period. Right? In the Vedic period, we had discussed about the four Vedas. Rig Ved, Samved, Yajurved, and the Atharved. Okay. The Rig Ved is the oldest Ved. Okay. Samved is for musical prayers and chants. Okay. Yajurved is basically for religious sacrifices, and Atharved is basically for magical chants for prosperity and expelled evils. Okay. And remember one thing also, Yajurved is basically the latest Veda. Latest Veda because it was recently, or not recently, basically you can say it was added in the last. Okay. So if we talk about the Rig Ved, basically, then remember in the Rig Ved, we had a mention of the chapter 10, right? Which is also known as Purushukta. Remember this thing? What was the Purushukta? Now it is my question to you. So Purushukta was basically the four Varnas of Vedic culture. Okay. And these four Varnas were like this. First is the Brahmanas. Second is the Kshatriyas. Third is the Vaishyas. And the fourth is Shudras. Okay. Brahmans were basically the teachers. Okay. Kshatriyas were basically the administrators. Okay. Vaishyas were basically the merchants, and the Shudras were basically the others, like the farmers, artisans, and craft crafts. Okay. So basically, if we talk about the Vaishyas, then these were also mentioned in the Rig Ved. Okay. And these were basically the merchant class. Similarly, if we talk about the Jains, okay, which was founded by whom? Mahavira. Okay, and Jain people were also in the class of merchants. So now, if they were the merchants, what was their role and how they are related with the banking field and why we are discussing about them? So the Jain and the Vaishya merchants, who were an integral part of India's business community, often acted as banker and moneylenders. These are the integral part. What does it mean? The Vaishyas were mentioned in the Rig Veda, and Jains were basically the people who converted into Jain religion. Right? It means that none of them were the outsider. They were all the part of the India's internal community. Okay, and the business communities because they belong to the merchant class. Okay, and their main thing was bankers and the moneylenders. How? Remember, I had told you about the Tola system, right? Which was very much similar to the gold loan and all. Okay. Like a person who wants rupees 10,000 as a loan. So he could reach a sharaf or you can say gold dealer, and he could submit his gold or other jewelry with him. Okay, thereafter the sharaf will examine the jewelry and weighs it, and in Hindi the weighs is known as the toll. That's why it is known as the Tola system, and as per the weight the money will be granted as a loan. As a loan, and jewelry will be the collateral. Okay, similar things were doing by these communities. Okay, basically not generally by using a Tola system, but apart Tola, they also you can say provides the loans and credits to the other merchants. Okay, and that's why they were basically known as the money lenders. On Hindi you can call them Lala. Okay, like that is the person who required rupees 10,000. Okay, so he could reach the Vaishya or the Jains for this. Okay, in exchange of something, because collateral security is required. Okay, in exchange of something they will provide him the money. All right, so that's why these were known as the bankers. Thereafter we have the Kangals and the Khatris. The Kangals and Khatris were trading communities in regions like Punjab, Rajasthan, played a significant role in the money lending and banking. So basically, if we talk about the Kangals and Khatris, Kangals and Khatris, so they are primarily found in three places: in Hindustan, or India, or Bharat. Okay. Second is Afghanistan. Third is Pakistan. So these are the three reasons where the Kangas and Khatris community found. Okay, and these were basically the merchant class people involved in wealth management and credit dealing. Okay, and these were much similar to the Jains and Vaishyas community. Okay, because they were also the money lenders. Okay, but addition to it, they were also the investors. All right, they not only provide the loans, but they also invest their monies in return of permanent interest, like as the modern banks do, or you can say like a revenue sharing. Okay, suppose this is you. You want rupees 10,000 investment in your business. Okay, so you could reach the Khatri or Kangal. Okay, and thereafter you have to explain your business idea to that person. Okay, if this person finds attractive, then he will give you rupees 10,000 as a investment. Remember, that is not the loan, it is the investment. Okay, and this investment could be provided as a interest on shares in the modern terms, you can say, or in simpler terms you can say interest. Okay, on monthly, periodically, quarterly, yearly basis, whatever the mutual decision between them. Second is the revenue sharing. Okay, like you ask him to give you rupees 10,000 and you promise that you will earn 2,500 as a revenue every month. Okay, so if there is a condition of interest, suppose 5% interest has been charged by you, so it means that 25 into 5 divided by 100, 5 and 2, rupees 125 you have to give as a interest every month to him. Okay, and second condition is that revenue sharing, so it means that you have to give him 1,250 rupees as a half of a revenue. All right, that's how the system works. Okay, remember, this couldn't be stopped. Like in the loan condition, suppose if you had brought a rupees 10,000 loan for 2 months for 5% interest. Okay, so it means that 2 5 are 10, 1,000 rupees you have to give on addition. So total you have to pay 11,000 as a loan prepayment. Like, and then your responsibility and your liability to that Kangal or the Khatri stopped. But because instead of loan you ask for the investment, it means that you have to pay him permanent interest and half of the revenue for a agreemental time period. Whatever your agreemental time period will be decided between you. Okay, and remember, if we're talking about the medieval time period or during the Mughal era, then these agreementals were known as the Dastavej. Remember, we had discussed about him in detail already. Okay, these are the conditions. All right, and remember one thing also. These Kangals and Khatris in the later stage converted into administrators as well as continued with their merchant work. Okay, unlike the Jain and the Vaishyas who were continued to be the merchants, the Kangals and the Khatris in the later stage or in the, you can say, later centuries, they were converted into the work of administrators. Okay. Next is the Hawala system. Now it is very, very important. Okay. And let me tell you in detail about Hawala system. Then first we should understand the meaning. Then I can explain you in a better form. The Hawala system, an informal and trust-based money transfer system, was widely used for remittances, trade financing, and fund transfer, continues to be the part of informal finance even today. So first, let's talk about the remittance. What do you mean by it? Okay. So if we talk about the remittances, then it is the money or foreign currency sent by an individual working abroad to his family living in his origin country. Okay, so remittance is basically the money or the foreign currency sent by an individual working abroad to his family living in his origin country. All right. Okay. So for example, suppose this is the person X. Okay. He lives in India. After completing his studies, he went to the USA or Russia. Whatever country he went. Okay. The currency of USA is United States dollars. Currency of Russia is rubles, right? That's the condition. So when he is working abroad, suppose he is earning rupees, or sorry, not rupees, ruble or USD 10,000 he is earning per month. Okay, and his monthly expenditure is US dollar or ruble 5,000 is monthly expenditure. So it means he is saving rupees, or sorry, he's saving 5,000 more. Okay, so this 5,000 he is sending to his family living in India. Okay, so in that case, India is his origin country, and the Russia or the USA where he is working is known as his foreign country. Okay, so the money which is sending to India is known as the remittance, because it is the money sending by an individual working abroad to his family. All right, and remember one thing: remittances are one of the major sources of foreign reserves. Okay, because they increase the foreign reserve of a country. Now you will ask me, Mr. X sending the money for his family, right? The money for his family. But how the money is expanding the India's foreign reserve? So let me tell you one thing and let me ask you one thing. Is Russian ruble or US dollars, they are applicable in India? No. In India, we have a currency, Indian National Rupees. In short, known as INR. Right? That is what we have. So if his family is getting ruble or US dollars, then they have to visit the bank. Okay, submit their rubles and dollars, and then they will get rupees as per the accordance. Okay, so it means that the rubles and the US dollars will be sent to the government of India. Because government of India, or on behalf of government of India, the Reserve Bank of India is basically converting the ruble and USD and then providing the rupees. Okay, so that money will be held by Reserve Bank of India, and Reserve Bank of India is the holder of Forex, which is known as the foreign reserve. So that's how the country's foreign reserve rises up. Okay, now thereafter the trade financing. Let's understand it also. So trade financing basically means facilitating the foreign trade and making payments abroad. Okay, let's understand it. This is Mr. X. Okay, he is in India. There is Mr. Y, who lives in Latvia. And Latvia is a European country. Okay, suppose he export an item, 100 units of it. Per unit cost rupees 10. Okay, that person in this case is the buyer. Mr. X is a seller, right? And if Mr. X is sending something to Y, then he will receive money or the payment of the items he has sent. Okay, so he will give him the money, and that is known as the international payment. Okay, because in Latvia we have a euros as the currency. Okay, in India we having the rupees. Okay, so first of all, Mr. Y will have to convert the Indian rupee into euro, and then he will send euros to Mr. X. Then Mr. X in India will reach the bank, submit his euros, and then will get rupees. Okay, so that's why trade financing is known as the international payment, because it is facilitating the foreign trade, the trade which is doing with the foreign entities. Okay, similar thing happens with the Indian part. Suppose if Mr. X is a buyer and Mr. Y is a seller. So first of all, he had to convert the euros. Sorry, he had to pay the money into the euros to that person. Sorry. He had to pay the money in rupees to that person, and that person will go to his bank and convert the rupees into euro. All right. So these are the examples of trade financing. Thereafter, the fund transfer. Just take an example. Suppose this is a company XYZ. Okay. This company headquarters in the USA, but also having the headquarters and offices in India, in Australia, okay, in China. All right. Now, suppose his Indian branch needs rupees 10 lakhs. Okay. Australia needs Australian dollars, or you can say 10 lakh Australian dollars. AD. Chinese firm also required 10 lakh yuans. Okay. So now the entire money held by the XYZ, because it is in USA, so they having the money in the US dollars. Thereafter, as per the requirements, they will send the money in the currency of the respective country. Like for India, they will send the money in rupees, for Australia in the Australian dollars, for China in the yuan. So it is known as the fund transfer, because they are transferring the funds in the currency. Now come to the Hawala system. So first of all, let me tell you one thing very straight. Hawala is illegal in India. Okay, and also in major parts of the world. And what was the reason behind it? The simple reason is hard to track the money supply. And how it works, let's understand. Suppose if any of the example, like whether it's a trade financing, okay, whether it's a remittances, all right, whether it's a fund transfer, any of these cases, one entity has to use the banks, then the bank will connect with the bank of another country, and then the recipient will get the money. Like, he is the sender, it is USA bank, it is Indian bank, and he is the recipient. Okay, he will submit USD 5,000 in the American bank. Bank will contact the Indian bank. The money would be transferred to the Indian bank. The Indian bank will convert the money into rupees 40,000 as per the conversion rate, and then it will be given to the recipient. In this system, there is a tracking. There is a complete tracking because it is on the basis of documentation. Okay, and even it is expensive method. Why expensive? Because there are charges applicable on transferring the amount. Okay, because whenever you use the formal institutions and the banks for the transfer of money, you are getting the guarantee that your money will be transferred safely. And for this, bank has to use its resources, his manpower, its entire system. That's why they require the fees or charges. And remember the one golden statement: the charges or fees are increasing with amount number. Okay, the larger the amount, the larger will be the fees. How? Just take an example. Suppose you have to transfer 5,000. The charge is 10%. It means that 500 will be the additional amount you have to pay. Okay, so USD 550 will be the amount you have to pay to the bank for the transfer of 5,000. Okay, if this amount would be 50,000 at 10%, so you have to give 55,000 USD to transfer the 50,000. Now you can see the difference. $4,500 more. Okay, so this is the charges applicable on the transfer, and that's why the Hawala system comes in the picture. Hawala is an informal system. It does not require documentation. Okay, because it is informal, there is no guarantee that your money will reach safely, and it is basically based on the mutual trust. Because you could not claim anyone if anything happens to your amount. Like, we could take an example. Suppose this is the person who wants to send the money. Then he will contact the agent one in country USA. This agent one will take over the money. The agent one will contact his friend agent 2 in India. Okay, then ask agent 2 to pay the amount to his family. That's how the Hawala system works. Okay, it is going through the agents, and there is no official record of amount, and it's tracking. Amount and tracking. You will ask how? Let me tell you. Suppose when you reach the bank for the transfer, you are mentioning how much amount you are transferring. Okay, so there is a complete mentioning of the amount. Second thing, you are using the bank's guarantee that your amount will be reached safely. And because you have go through the documentation process, so if anything happens with your account, then you could claim. But because in the Hawala system, you are doing no documentation, because there is no guarantee and there is only mutual trust. Okay, it means that you couldn't claim any amount if anything's happened with your amount. Okay, and that's why it is a headache for the authorities of any country, whether it's USA, Russia, India, whatever countries, because we are not getting the details about the money flow. Okay, because we are unable to track the money. That's why that money could be used for the terrorism and anti-state policy. Okay, this money could also be used for tax exceptions, because there is no official record, so you couldn't apply the tax. Okay, and even this is not included in forex records, because we do not know the source of this money. Okay, so that's why the Hawala system is an informal finance even today, and it is declared illegal in most of the countries. Okay, so students, basically in this lecture we had discussed the several facts and figures. I hope that you have understood the facts and figures I had discussed with you. Okay, just revise all these facts and figures, and basically in the next lecture also we have to continue with the same topic. We will discuss about the other facts and figures, and also we will have a look upon the facts and figures which we had completed in the previous lectures already. You can say it will be just like a revision part. Okay, till then just revise all the facts and figures, and thank you.